Okay, hi everyone. So it's the 16th of March. We're doing another weekly update on the FX market. Today, what we have, you see got my US color shirt on here tonight, today. So we actually have a lot of news, a lot of things happening in the US dollar, a lot of things happening in the market, recent activity in terms of the stock markets, crashing a bit in terms of what's happening with the virus, how it's affecting the global markets. We have Daniel and we have Kenneth here. Jonathan's on the background running operating stuff as well. We're going to be guiding you through what happened last week, some trade ideas we went through last week, and also my views on what I think could be happening this week. All right. So first off, we have Kenneth. Kenneth has been a student of mine since a couple of years ago. Now he's a partner with me at Forex Briefcase, managing the client's expectations, managing clients' onboardings, getting clients into the system. I'll get Kenneth here to share with you a bit more about our analysis last week, how the market has been going, and some of the trade ideas that we shared. Let me just unmute him here. Kenneth, there you go.
Okay. Hi, everybody. My name is Kenneth. So something about what happened last week, right? For the USD, like the President Trump will be seeking like a payroll tax cut to help hourly wages earners who have potential lose their income while staying at home. And the US will be suspending all travels from 26 European countries for the next 30 days. And for like last Monday, right, for the US, CAD get up by around 110 pips on the market open on Monday due to the CAD weakness. Okay, let me open up my chart over here. And okay, this is the chart that we have posted on last Monday on our Forex Trading Asia. So the start of the Saudi-Russia oil war after Russia Minister of Energy declined to join in a collective production cut with Saudi Arabia during the OPEC meeting. So Saudi Arabia planned to cut oil prices by the most in over 20 years. So Saudi Arabia also planned to increase oil production to above 10 million barrels a day. So hours before the market closed for the week, the Bank of Canada cut interest rate by 0.5%. from 1.2% to 0.7% in response of the impact caused by the coronavirus to the Canadian economy. So during the time, this is the last Monday chart that we have posted, and currently Canadian dollars is resting on our zone around over here. So next for our pound USD, the pound USD ended the week about 800 pips lower. And the Bank of England cut interest rate by 0.5% from 0.75% to 0.2% in response to the impact caused by the corona to the UK economy. And the government, Mark Carney, said that the BOE can still reduce interest rate to below 0.25% and close but above 0%. So this is how like the whole market have run from our last Monday, and you can see that the pound really drop all the way down up to over here, and it's like after the cut off interest rate. So the UK finance minister said that he will set aside £5 billion to aid the Britain's national health services and other public service in track after corona outbreak. Yeah, and that's all I have for now for the market for the last week. So I'll pass it back to June.
Okay, so that was quite a good overview. We looked at the US CAD and how it was being affected by the oil outputs in Iran, over the Middle East. We also looked at the pound. It's actually one of my favorite trading pairs where, you know, we've seen the pound crashing a lot lower as well. So last week was really quite a lot of things happening in the markets. You know, we picked on the two, right? We picked on the US CAD and the pound. We looked at those two pairs. We also have signaled other currency pairs as well. I'll get Daniel to share more with you about the trade signals that was fired out last week.
Okay, great. So as Jean and Kenneth has mentioned, last week was really a really challenging and interesting time last week. So let me share two of the signals we did. I shared out 8 signals last week itself. Okay, if you can see my chart now. Okay, so last week is really interesting. So on the 12th of March, one of the signal Euro Yen itself, there were a lot of high expectation for the European ECB will move subsequently to ease the monetary policy, especially after the surprising interest cut rates by the Bank of England and the US Fed Reserve as well. So that was the more of the sentiments itself. And then we know that the spread of coronavirus is still driving a lot of investors to safe haven currencies such as the yen, US dollar itself. So when we look at the chart itself, you can see that the Euro Yen more or less, if you can see my arrow, let me put the laser pointer down. You can see the arrow, the downtrend coming down as it couldn't go past the resistance level of 118.6 area, right? So it's been going down itself, and then when it reached to the entry level of went up and then coming back down again at 117.27. I signal the sell trade on the Euro Yen. Okay, and what happened? Okay, what happened was that the chart just continued to go down. It was very nice trade. It fluctuated down to 20 pips before it went up itself. As you can see, it's still maintained within the Bollinger Band itself. So I have felt that I had a high probability that it will continue to go down itself. And then with you can't see here now, but the MACD, it actually has continue to have the sell momentum itself. So I continue to hold trade all the way to take profit of 3 itself. So TP3 hit. It's a very nice trade done this for Euro Yen itself. And then what happened next? So on the 13th of March, so just the next day alone, interestingly enough, the Euro USD continued to slip lower past the 1.125 support zone itself because when the news came out from the ECB meeting itself, it fails to boost the confidence itself because they continue to hold the interest rate. They did not drop as expected. So this tells a lot of analysis that they don't think it's a response sufficiently to the threat of the coronavirus itself. So you can see down here, I pointed down here, ECB it actually went up, and then after which, when there was a lot of interviews, they didn't think, a lot of analysts didn't think it's good response. So it continued to go down, and it went past down the early morning in Singapore time. It went past down the support zone of 1.1250. Now you can see it went all the way down, and this is what early in the morning itself. And then when you retrace back up, and we try to hit back the new resistance of 1.125, it starts to drop back down again itself. So I signal the trade full sell at 1.1193. And what happened continuously was I continue to monitor the trade. It actually fluctuated up and down itself. Again, it hit about the 20 pips of TP1 first before it went up to, but it didn't hit this. Stop loss. Sorry, it's the stop loss. And then it continued all the way down because it was maintained within the Bollinger Band. I decided to hold, and it hit the TP3 sell. So it's very nice trade itself. So overall, very interesting times for Euro USD and the Euro Yen itself. So now I give it back to Pete.
All right. So we looked at the Euro Yen and also the Euro US. So we've covered the US CAD, we've covered the pound US dollar, we've covered the Euro Yen, we've covered the Euro US. We're looking at quite a broad level of currency pairs that have reacted towards either a US dollar strength or reacted towards a move towards the reserve currencies. Why is this happening? It's really because of what's happening in the markets right now. The virus has gone global. It's it's a pandemic now where it's affecting markets beyond the levels of just what people are fearing. Is actually affecting the financial markets as well, which is why we see central banks taking on actions, monetary policy actions by cutting rates. And you actually realize that today is the 16th of March. The US just did a surprise cut of 1%. The Reserve Bank of New Zealand also did a surprise cut as well. So right now we are seeing a lot of surprise cuts, a lot of surprise monetary policy actions from central banks. They're not scheduled. They're just happening as the central banks look to protect and to stimulate the economy, right? To cut rates so that investors and the retail, the public, likely, they're hoping that they're more likely to spend more to stimulate the economy, to try and increase spending and also to increase activity in the market. However, what we've seen is with all these cuts in interest rates, we haven't seen the respective move in currency, right? We haven't seen, as US cuts rates, we haven't seen the US dollar weakening. As New Zealand cuts rates, let me just bring up my chart. As New Zealand cuts rates, we haven't seen that big move in a weakening of a New Zealand dollar as well. So what's actually happening now, I'll get these questions a lot from my investors and also from my students, is why? Why are we looking at interest rates being cut, but it's not really affecting the currency? At this point, as interest rates cut, it's not so much in terms of weakening the currency. It's really trying to stimulate the economy. However, on my Facebook post, I've been commenting quite a bit saying that to really have an impact, it's not so much about monetary policy. It's more about fiscal policies that the government should be applying. And that's what we've actually been seeing coming up now. The tax cuts are coming in, rebates are coming in, governments are spending more. There's QE that's coming into play. There's another monetary policy as well. The US just increased QE. So we're seeing all kinds of actions, physical and monetary policy, coming in to try and stimulate the economy so that we could see, I wouldn't say that we'll avoid a recession. I wouldn't say that we'll avoid a market crash. It's probably to minimize the overall impact of what's going to happen in the market. More specifically, looking at any news this week, let me just bring that up. So looking at the news this week, this is Monday. We've already seen a lot of news happening in terms of what's happening in terms of the markets. Take note that there's going to be a G7 meeting where I don't think they're actually going to catch up together. I think they're more likely going to do a conference call like what we're doing here so that they can try and strategize about what to do. We'll see monetary policy meeting minutes on Tuesday. We will see some economic sentiment, retail sales for the US on Tuesday night. CAD, CPI, and a bit of other Aussie employment information, Swiss National Bank giving more info, and also retail sales. So what you notice here is it's actually not going to be very news heavy this week. Again, however, although it's not going to be very news heavy, we still think that the markets are going to move quite a bit because of what's happening in terms of the virus, because of the reaction in the stock markets, because of the move and the flow of liquidity from the high risk towards the reserve currencies. You see that gold hasn't been reacting too well as people get out of gold into reserve currencies, or mostly just to hold on to their own cash as well. Okay, so opportunities this week, I would still look towards a stronger US dollar in relative terms. So it's not that US is going to be stronger because of economic data or because of what they are likely to be, the actions they are carrying out. It's more likely that US dollar is going to be stronger because of everyone else being weaker. All right. So if you want more information about our analysis, head on to forextradingasia.com. If you want more trade signals that we fire out, head into our Telegram chat group. We'll put the link below as well. If you have any questions or any feedback that you would like us to talk about next week, please leave it in the comments. And in the meantime, I hope you really trade safe, manage your risk. At this point in time, it's not so much about, as much as we want to try to make as much money as we can, it's not so much about trying to maximize your returns. It's also about managing your risk so that one bad trade doesn't wipe out your account, right? That one bad trade should just be a small blip in your overall trading account where you consistently build and accumulate your profits. Remember that trading is a long-term journey. It's not something that you do in one day and trying to make that big returns. Okay, so thank you all for watching, and thank you, Daniel and Kenneth, for your input in this session. We'll catch up again next week. Thank you. Bye.